Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Friday, June 23rd, 2017. I'm Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. We continue to hold right near the center of this range, and again, as I mentioned before, there's no real edge at the center of this range right now, at least from a swing perspective, and even from a day trading perspective, not a lot of great edge here as well. You really have to be patient in here. This isn't my favorite range. Failing below 43.5 implied a return back toward 24s. And this thing has labored even to get there, kind of getting stuck right near the HPN of the range around 36s, 34s. So again, the failure to hold above 43.5 suggested a move back against the range. I mentioned if price was able to get to the outer edge of this range, say 24.10s, that could offer an opportunity to swing it back up. If this were to get even lower into the LVN of 2400 to 2404, that could also offer an opportunity to buy. But right here in this zone, not a great opportunity, and I would basically use caution in this area right now and just kind of have a wait and see game. If this thing were to drop down, it would provide an opportunity to push this thing higher, but we've yet to see that. So I would reserve caution here until proven otherwise. Intraday chart really doesn't offer any real clues either. We have 28s that's offering support, 40s that's offering resistance, and it could be short-term fade the edges until proven otherwise. In terms of crude oil right now, we've seen a downward price discovery phase that's been very aggressive. Failed new highs, which is one of my favorite trades in a downtrending market, has paid week over the last month as this thing has dropped downward. We've now pushed outside the key range, 43.76s, and are holding outside. And what I mentioned before is now that we are outside this range, we can then begin to watch for signs of rejection that could lead this thing back toward composite value at 48.75. It's important to note we have not seen rejection yet. We're holding outside the range, but there's been no rejection just yet. If price were to push back above 43.75s and 44s, that could then spark a stop run that could lead to a move back toward 48.75s. But we haven't seen rejection yet, and we're still in a downward price discovery phase. So I would say we're in the last stages of this down move, but it's still a primarily downtrending market, and we're looking for signs of rejection that would lead to this move, but we haven't seen it yet. So it's still a downward focus until proven otherwise. Looking at gold briefly here, we were looking for signs of rejection above 1250 that could lead to a move back toward 1229. But honestly here, price pushed above 1250 and held throughout the day. Price dropped briefly below 1250 and was rejected, and now we're seeing the result of a continuation up. So 1250 was the pivot right there to watch. Price held above it, and we're now testing composite VPOC at 1259. Again, no real edge around composite VPOC, especially when price has been trading above and below it. So right now, not really a great opportunity at the moment. Getting above 1250 is short-term bullish, but again, no great edge in this zone at this moment. Now the NQ here is very, very interesting. I've mentioned before that given the pullback that we've seen and the range that's developed, this would typically indicate a squeeze to come. I also mentioned that 5800 to 5815 is a zone that bears want to continue to defend to trap these late bulls up here. In defending that zone, it could provide a push back toward 5550 or perhaps into the lower part of the LVN into about 5500. That move, should it occur, could still provide a great buying opportunity. We're still long-term trending up. The structure remains intact. Bears are coming in to defend this 5800 at the moment, but they're not really getting paid. So I would say that these bears here are at risk at seeing their stops get run. 5815 is the key level, 5800 the zone. So above that zone will spark a squeeze back toward 5900 and 6K. And so continue to watch this area here. Bears are coming in to defend, but they're not getting paid. They're seeing higher lows, a rejection of those lows. That all points to more strength, and the fact that bears are coming into this zone here helps to provide more fuel and stops above that level once that squeeze does occur. So while we may see another pullback, I still believe bulls have the upper hand in the overall uptrending market, and above 58.15 could squeeze very, very nicely back toward 5,900 and 6K. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.